Hey guys, this is Dennis, the active trend trader. Let me ask you a question. Are your investments up 100% for the year so far? I know mine aren't, and I'm trading a darn good system in the active trend trading system. Special guest today that we'll be interviewing after we do the market overview is Eric Gallum. Eric has been shown triple-digit gains utilizing the active trend trading system over the last few years. He's going to crack the door open a little bit and show us some of the secrets that he uses to be able to basically use the tools that active trend trading provides him. And he's going to highlight 3 of them he focuses on. You don't want to miss it. It's going to be after the review. So with no further ado, why don't we basically get into today's session? Okay, as you're seeing, basically what's going on. The market sold off today. However, they didn't sell off a lot. They basically came down and started backing off of where we anticipated support to be. About 2 weeks ago, as we see, the markets bounced off of, basically broke out, ran up. We knew that this run up was a little bit faster than it should be. And today it's pulling back. Where is it reverting back to? It's reverting back to the mean of the 20-day moving average. Now, is it going to go ahead and retest all the way back down and these lower levels? That's a great question. Could be. A couple of things that we want to keep our eye on. One, the TSI has turned over and is falling down. The market forecast is, in fact, rolled over and also falling down. Weekly charts, the negative divergence, as we see here on the market on the TSI, is also reflecting weakness. The week isn't done. We've got one more day to do this week. So if price action drop a little bit more, who knows? We may wind up with a bearish engulfing pattern or a bearish pattern, a reversal pattern on the weekly charts. Am I looking to buy right now at this moment in time on the S&P? The answer to that is no. When might I be looking to buy? Well, what's going to happen with prices get down into this range here? Anywhere from the uptrend line down to the 50-day moving average. That's what I'm looking at. The other thing I'm looking for is what happens if prices continue to fall back down, get down to the support of the moving average or the support of this breakout area, do a rally attempt. And if that rally attempt fails, then watch it to the downside. A lot of things are coming home to roost with the current administration that are basically, it's going to be interesting on how they weather the storm. Now, we realize there's a lot of people out there really backing, this administration for better or worse. And so they don't want it at least to appear like it's failing. So we'll see that. But, the market knows. And the market is basically showing weakness right now. At the same time I say that, the market is also showing you, and this is a special. I don't usually show this to everybody, but I'm going to basically show you one of the things that I watch, and this is predicted market bottoms, or at least reversal points that lead to a nice move to the upside, multiple time frames. If you've never seen this before, again, take a look at this. It's called the percentage of stocks below the 20-day moving average. When we get markets like we've had here recently, where price action has been moving down, this will bring up something I keep my eye on. And some people use the 20-day moving average. Some people use the 50-day moving average, but it paints a very interesting picture. This is taken off of the NYSE, and what it shows is when it drops down to a certain level. In other words, when it drops down like it has done today. This was a dive. We got down below the 30 level. When we close below the 30, oftentimes a reversal is in the offing. It hasn't happened yet, but often, oftentimes the stocks that make up the NYC don't like to stay below the 20-day moving average for a long time. A couple of things to keep in mind about this particular indicator, though. I use it in a couple of ways. One, if I'm having a significant amount of the stocks below the 20-day moving average, however, the S&P and the Nasdaq is continuing to push higher, that's telling us that the stocks that have the biggest portion of the positions are the weighted average of those two weighted average. The stocks with the greater weight are typically the stocks that are holding it up. What that means is when you lift the hood is other stocks are basically floundering around and not doing well at all. That's why we see things like the Russell, the small cap, which is not a weighted index, flailing around, dropping more significantly than the other indexes. Hence, oftentimes the Russell is a better indication of what truly is going on in the economy, because the institutions are not propping up everything. They're just propping up the big boys. So when this happens, oftentimes this leads to a reversal pattern and a move back up. We've had some negative divergence in this indicator. And I'll tell you what, I'll throw in the website on this down into the descriptions on the YouTube channel so that you can go and check it out yourself. It's a nice indicator to just watch. Other thing that we're looking at as we move forward, the Dow dives as stocks sell off, but Amazon hits a fresh high. Again, Amazon, one of the big stocks in the indexes, and a very heavily weighted stock. So that's what we got going on with the S&P. What about the Qs or the Nasdaq? Nasdaq also has a nice. There we go. So a similar type situation. You know, price action are just still moving up. Let's draw a trend line up here to see. So we'll have a better idea on mapping this. Trend line's already there. Just had to wait for everything to come into place. As you can see, we pushed up above the 1618 extension here. This is from this move from that swing high there to this swing low there. That was the projection extension up to the upside. One of the things that you'll notice when Eric does his discussion today, he really loves what I've taught about the Fibonacci's. If you're looking for a great place to learn something about Fibonacci's, go over to the YouTube channel, Market Tech Talk, and there's a 2-part series about price Fibonacci's and time Fibonacci's. I'm going to be updating that training, but the basics there are really good if you want to learn how to use Fibonacci's. As we see, price action is pulled back down to where? The 8-day moving average and the what? The uptrend line. Now, this, I mean, heavens, this could be the first day of a rally attempt. We do not know at this particular time. At the same time, though, what are we seeing here on indexes themselves? We have a reversal on the TSI with a arrow pointing that, hey, the uptrend is potentially coming to a halt, or certainly the momentum has rolled over. The MACD has slightly tipped down on the histogram, right? The volume above average. We are not getting a full-blown rollover here on the weekly charts yet, but it is definitely something to keep our eye on. Take a look here. We've got two of the momentum lines on the market forecast in the upper reversal zone on the weekly chart. We'll see if that leads us to some weakness. Again, at this time, the trend line is still intact. We are pressing up. It appears that it is rejecting this price action here. Would not surprise me to see a pullback down into the 20-day moving average. That is typically the mean that they talk about when they say a price action is reverting to the mean. And that could be also coincide with what? The 1272 price extension on the Fibonacci. So now the other thing we can do here is if we do come down and take out this low here, I will draw another Fibonacci from this low here up to this high here for a particular pullback towards the magic fib box. Believe it or not, they work. They really do. What are we doing on the Russell? I've got the Russell really filled in here with the Fibonacci's and all that stuff. As you can see, I drew in a Fibonacci from this low to that high. Look what happened today. And this is part of the thing. When we started back down to the downside, this 1272, which is right there, that was the downside target. And how close did we come to it today? Well, there's a 217.78. And look at that, 217.85. So within 7 cents. That's close enough, to me, that's close enough to hitting the mark with the Fibonacci's. And so what happens now? Well, as you can see, we've got a wide candlestick with resistance up here at about the 223 area, support down here at the fib here at the 217.75 level, and we'll see what if it just ricochets back and forth between those two areas. We have dropped below all the moving averages. The moving averages are starting to drop down. The 8's crossed the 20. The 8 has crossed the 34, and it looks like it's pushing hard to cross below the 50. The 50-day moving average has also crossed crossed over and is pointing down now. So what I like to characterize this as, all the moving average, these upper moving average that we utilize for a lot of support and resistance, they're all facing down. And so if they are in a catching mode, they will catch and the rebound will be back down to the downside. How far? So look for a rally attempt up into the moving averages and then a fail. We had a rally attempt here. Here was a 2-day rally attempt a couple of weeks ago. 2-day rally attempt failed. And we've gone 1, 2, 3, 4 days. It was Monday. 4 days to the downside significantly. And again, more so than the other indexes. PSI has crossed down to the downside. Market forecast is running hard down to the downside. The MACD on the daily basis is moving down to the downside, larger volume. And then also on the weekly chart so far, TSI is crossed to the downside. Market forecast hasn't really succumbed to the downside. But what's very interesting, this one thing that I've been studying is when the MACD actually crosses either to the upside or to the downside, you want to be looking at taking the trades in the direction that the MACD is going to. But where do we take the trades? Typically bouncing off either support or resistance. And that's the trade we want to favor. As you can see, as momentum was worked off, as the MACD is falling here, price action on the IWM or the Russell was just driving sideways. This is starting to look a little bit more serious. Let's see where it goes from here. And the next place where we anticipate a significant stop, on here about this level here. What level is that? That is the 1618 Fibonacci extension off of that last swing low to swing high. So I'll leave you with one stock. Now when I checked this when the market was open, this stock was hanging in there really good. Now if it's gone bad, send it in for where do you see? It may still be holding up. Yeah, it is. This is BX. BX, as you can see, the TSI started to bounce up at a level of support. TSI, the market forecast, though, has continued to move down. MACD has continued to move down, but it is hanging in there really good with support where at about the 96.45 to 96.50 level. has earnings coming up when? Right there on the 22nd of July. So in a week, about a little bit over a week. And so this could be, okay, if this is the kind of pattern you want to look for. If the market is showing weakness, that you're going to anticipate it moving back up to the upside. This particular entity does have, show you a BX does have weekly options. And so for those of you who want to trade options, this could be a good opportunity for you, perhaps for a pre-earnings run, just to watch it, to see if we can catch this about where it's at and run from where it's at to where. I would give it an upside target before earnings up here about, let's see, this is at 97, and that's $3 to break out of there. Get another $3 up to about 103, and make a pretty good little option to run. We've got more than $5, so you can do a $5 spread, and that could work out for you fairly well. We'll be following this to see if I get a better signal to get out to the premium active trend trading members. So with that being said, that basically covers what we have to cover today. I want to remind you that, again, continue to watch. I'm really impressed with, Eric's interview. I hope you enjoy it. I know I enjoy getting to chat with Eric, and I just love how his approach. He is a consummate student of the market, and I love how he is utilized and basically taken the active trend trading system, and he basically still uses it, but the adjustments he's made to himself. Here's a little sneak preview. He only trades 3 entities. And he only has kind of 3 different things that he looks at before he enters trades, and 1 or 2 things he looks at when he exits trades. But again, he's compounding at over 100% for the year, and that triple digit gains have taken place multiple times over the past few years. And so he's my good friend, and so I think you'll enjoy it. Leave some comments down there if you have questions, and let Eric know. Give Eric a shout out and say, hey, man, thank you so much for sharing the secrets of how you trade. So until next time, aloha. God bless everybody. Hey, I'm really glad today to be welcoming Eric Gallup into, is it Gallup or Gallam? Eric?
Gallam.
Gallam, okay. Eric and his wife, Ann, did us a great honor of visiting my wife and I over here in Hawaii. And we had dinner down at Duke's and then breakfast out at one of the places in Kolina. We had a really great time. And as you can see, we've got him hooked on Aloha shirts, because you've got your Aloha shirt on, and you're looking great this morning, Eric.
Thank you. Wear it all the time.
And so one of the reasons I invited Eric to share with us today is, Eric, how long have you been trading with us with active trend trading?
Since 2015.
2015. So, wow. So that's what, almost 8 years. And I know that one of the things I really love about it is, I always point to you to say, I love it when people do better than I am applying my system. But
okay.
And you did 100%. Okay, I did 70% last year. You did over 100% last year, and this is June. This is the first day of July, 2021, and you're already up 100%. So
that's correct.
So one of the things I just wanted to ask you, is what was one of the first things that attracted you to active trend trading? What made it make sense for you?
I was in the Raleigh, North Carolina IBD meetup group, and somebody mentioned your name in that meetup. And I then contacted you through, I think, BAM, if I'm not mistaken.
Yeah.
some way I was able to get in touch with you, and just followed you. You taught me a whole lot at the very beginning, and you continue to teach me a whole lot. But my early learning was exponential, and that made me a better trader.
And so, and that was kind of like my next kind of leads me into my next question is, so how does that, applying the active trend trading rules on kind of, how does that provide you, a more clear and simple solution for your trading, and how could it help somebody else who might be trading?
There's a number of things that you've said over the years, and you told me that I believe one individual was only trading Apple.
Yeah.
And what I did is I wanted to simplify things. You I believe have the Elite 8 right now.
Right.
That is too much for me to handle. I take trading as a second job.
Mm-hmm.
I spend no less than 40 hours a week looking at charts.
Wow.
On the weekends, my routine was to go through the IBD 50. In fact, what I've been doing is since 2017 is keeping a running list of the IBD 50.
Right.
And I would go through the stocks and what pattern is that? What candlestick is that? You did training on candlesticks and candlestick reversals. Anybody that I think is going to be successful has to understand those candlesticks and those candlestick reversals and have to be looking for them. You taught me about Fibonacci's. I didn't know about Fibonacci's. I use Fibonacci's primarily as my exit.
Oh.
A lot of times I think you're using, or you were using like a 5%, 10%, 15% target as your T1, T2, and T3.
Right.
You taught me 127, the 127 fib, and right now I'm trading on a couple of them. I exited all of TQQ.
Right.
Was it yesterday or the day before? I can't remember, but I've exited that completely based on the 127 fib. Okay. So to go back to the original, your guy says simplify, and that's one of your mottos. So I have chosen only to trade 3, and I still takes me 40 hours a week to review and study that. Now that doesn't mean that I'm not getting on other videos or rewatching the videos that posted. That counts towards my time.
Sure.
But I'm only trading FNGU. I'm only trading TQQ, and I'm only trading SOXL.
Okay. So it used to be called the Elite 8. That was the leverage ETFs, and I've just gone now to make it. It's of course I offer the what I call the autopilot leverage ETF service, and it's just basically typically 2 triggers happen each week in that, and so I've basically consolidated down to a smaller number of stock ETFs. Also, the guy you were mentioning, Dougie Olson, back in mid 2000s was 2005 through about 2015. He was trading just Apple, and just knocking it out of the park. And so what it spoke to was that concentrated effort. Basically, he became so intimate with Apple, he knew exactly when to be trading, and he was just trading options on it, and like I said, was knocking it out of the park totally. So a lot of people think that they have to trade options but in reality, you're not trading options very often on the 3 leverage ETFs that you're trading, are you?
All right. So I joined your UNG SO test trades
Yeah.
or option trades, and I am quickly exiting those as we speak. I've completely exited my UNG. I am trying to get rid of my 60 contracts. So, and that's being a bear. I think that I'm finding out that my routing, even though I'm using Thinkorswim, you get filled, and I put in the exact same order, and I don't get.
Yeah.
So, and I was on a webinar with Mark Intervini on Monday, and we were going over a little bit about his style, and he was asked, does he trade options? The answer is no, he doesn't trade options. He's too focused on bigger picture, that he wants to make big money rather than wasting is not the right term, but you have to spend a lot of time figuring out the Theo calculator and what have you.
Yep.
And he just doesn't want to do that. And I've decided that time is precious, and I don't want to trade options. I don't have to trade options to get 100% return.
Yeah.
In fact, I've not had I've not had a losing trade since the first week in January, and that was with DRIP. I've made over 260 trades, and those 3 trades in DRIP were the losers. So my win-loss percentage is.
So what's your average now? Just so to let people know, are you doing it where you're doing the 3 targeted exits? In other words, because what I do, of course, with the regular service is I have profit target number 1, 2, and 3 with a stop loss, and then as we hit the profit targets, I pull the trailing stop up. So, are you doing 3 profit targets, or are you just basically going with the Fibonacci's and taking more of your positions off once you get into a trade, and then how much of your capital percentage-wise are you pushing in on every trade?
I'm a modified Can Slim investor,
right?
And Bill O'Neill, who developed Can Slim system, wanted to really start his acronym with M. M stands for the market direction. And it took me a little while to understand this, but even based on the name of your company, Active Trend Trading,
right?
That you need to be following the market direction. So for instance, there's SQQQ, which is the inverse for TQQ.
Right.
I almost never trade that. I've made 1 or 2 trades this year, but when I get in, it's based on the reversal candle. It's based on market forecast below 20, and it's based on PSI cross below 4.
Right. And so,
but those reversal candles, those hammers.
Right.
I love hammers. Hammers are my go-to entry.
Correct.
And the other thing that I follow is pretty much the distribution count Slim has.
Okay.
And they use what's called a rally day, and they use a fall through day. And a fall through day is their rule is that you actually have to buy 100%, not 100% of your money in, but the rule is you absolutely positively have to buy something on a follow through.
Yes.
And that has not let me down yet.
Okay. So, but you're still focusing just on 3 ETFs.
That's correct.
Okay. So, Well, I'd like to kind of see it in let's see, so you focus on FNGU, right?
Which doesn't have options, but you know, it's got huge liquidity.
Okay, and FNGU is what sector is that in?
So it's communications. It is Facebook, Netflix, Google, up. FNGU.
Okay, so Facebook, Netflix, Google, and what?
Up. It's going up.
Okay.
As opposed to FNGD.
I gotcha. So now, is it a leverage ETF?
The 3 times leveraged.
Okay.
You know, it took me a while to have the chutzpah, so to speak, to enter into these 3 times leveraged. But if I make the decision on like the Nasdaq and Qs,
right,
you're going to put your money in with Qs. Well, you may as well put your money in with T.
So, and again, back to so you're trading 3 different things. Do you split your capital up where you put a third of it into each position, or you trading margin at all? Well, you actually can't trade. You can't trade margin if you're trading these.
I can trade on margin with.
You can.
I can.
Okay.
And I do. So there's a free website that you called Portfolio Analyzer.
Okay.
And what I did is I was looking at the Elite 8. And
right.
I put in the Elite 8 ETFs.
Right.
And I made them equal weight.
Right.
And then I ran it over. I can't remember the time frame.
Sure.
It was a 3-year time frame. And it was clear to me that FNGU, SOXL, and TQQ were the winners. LabU on a weekly or a monthly time frame can outcompete any of these other ones.
Okay.
But in the long term, it can't. So for every dollar that I make in TQQ, I make $1.50 in SOXL.
Okay.
But I make $2 in FNGU.
Wow.
So then what I've done is I have created a spreadsheet to say, all right, based on those percentages, I'm going to be heavier in FNG.
Okay.
My middle amount of money is going to go in SOXL, and my least amount of money is going to TQQ.
TQQQ. Okay.
But it's my spreadsheet. You know, I just plug in the amount of money available to.
Right.
And it calculates based on the percentage, and it says, all right, you're going to buy 555 shares. I never round down. I want to be 100% invested if the market is, according to IBD, if it's in an uptrend.
Okay.
If the market's under pressure, I'm down to 50%. And what I've found with your system is I'm usually out way before the other guys are changing it to under pressure or action.
So you're out before.
And I'm also back into the market before they actually say that I should be.
That's one of the things. So so you find you like, and so the what I'm going to ask you to do, Eric, is kind of walk us through, like on your recent TQQ trade, because you said you just closed it out. We're going to switch over now and take a look at the chart, and
okay.
and again,